President Trump just outlined his tax plans for 2026, and not surprisingly, he wants to make some big changes. On one hand, Trump says that he wants to use tariffs to reduce or potentially eliminate the income tax. By the way, I already made a whole video explaining that. If you want to watch it, I'll link it for you down in the description. And then on the other hand, he wants to reform the tax code by offering big tax breaks. Now, as a licensed attorney who's not your attorney, I spent some time studying the Trump tax proposals, and from what I gathered, it looks like there are three main things that he wants to do. Number one, he wants to eliminate certain tax categories. For example, he talks about eliminating the tax you pay on Social Security benefits. Number two, he wants to extend certain tax cuts, which are set to expire in the end of 2025. And number three, the third E, encourage businesses to make their products in America by giving them tax incentives. So let's break this down not from a political perspective, but from a financial perspective. That way you get a better understanding of what could potentially be coming in 2026 and beyond. Now, a quick refresher so we're on the same page. The United States government is not a for-profit entity. They collect taxes from taxpayers. So you pay taxes to the government. I'll explain how you're paying taxes in just a minute. And then the government is going to go out and spend these tax dollars that you give, and then some, through the help of debt, because right now the United States government is deeply in debt, and they spend money on things like the military and healthcare and apparently some very expensive coffee cups. Now, there's a handful of different ways that the government collects taxes from you. I shared this in a video recently, but I think it'll be helpful if I share it again because I'm talking about taxes in this video. Here are a few categories of taxes that you might be paying. Number one are income taxes. You go to work and get paid, you pay income taxes before you even get that money. Number two are payroll taxes. When you work a salary, you pay payroll taxes, which are your FICA taxes, and then your employer also pays FICA taxes on the salary that they pay you. Number three are capital gains taxes. If you buy a stock and you sell it for a profit, that's a capital gains tax on your investment profits. Number four are corporate taxes. So if you run a big corporation called a C corporation, and the corporation makes a profit, the corporation has to pay taxes on that profit in addition to when the owners get the money distributed to them. It's called a double tax. I'll explain more about that in just a little bit. Number five are property taxes. You buy a house, well, you have to pay property taxes every single year. Number six are estate taxes. These are also known as death taxes. If you die and you pass down a lot of wealth to your kids or really anybody, you have to now worry about these death taxes. Now, if you're only passing down $1 or $2 million, you don't have to worry about it. This is for people that are passing down more than $14 million at the time I'm recording this video. Number seven are sales taxes. You go to the grocery store, buy something, you got to pay a tax. Number eight are sin taxes. You buy cigarettes, you buy lottery. Those are considered sin taxes. The government doesn't like them, so they tax it. Number nine are tariffs. You know, we've been talking about this more and more recently, but if you import something from a foreign country that has a tariff, well, now the person that's buying that product has to also pay that tax, which is called the tariff tax, and then all the other taxes, which are just lumped into other. For example, you might have heard of some airport taxes or some hotel taxes. These are all those other taxes. This year, President Trump is proposing to eliminate certain taxes or extend certain tax breaks, or to encourage businesses to make in America by incentivizing them through tax cuts, as a way to simplify some of these taxes. Now you might be wondering, well, right now we have all of these different taxes right here. If we're collecting less taxes, how is the government going to pay all their bills? And either the government can shrink how much money they spend by reducing their expenses, or they can hope that the tax cuts will allow for growth in the economy, and the growth in the economy could also potentially increase the tax revenue. I'm not going to get into all of that right now. I want to go over the tax proposals, so let's go over that. Let's just go in order down the list because you'll see that there's a lot of changes happening, and this is actually one of the reasons why on March 11th, I'm hosting a free live and virtual wealth building workshop where I'm going to be going over how you can find the investment opportunity with all the changes that we're seeing happening, from things like tariffs and things like DOGE and all the monetary policy changes that we're seeing now in this changing economy, because a lot of things are changing faster than what a lot of people even thought. And so in this workshop, I'm going to be going over some of these changes, including technology and AI, and how these can create a unique investment opportunity. It's a completely free workshop. I'm hosting it twice on March 11th, one at 10:30 a.m. Eastern Standard Time, and then again at 8 p.m. Eastern Standard Time. It's completely free, so if you're an investor and you want to see how you can find and stay on top of these new investment opportunities, I got the link for you to join down in the description below. Just make sure you register and save your spot because there's a limited number of people that can actually join me live. Three of the biggest proposals that that Trump has made when it comes to eliminating taxes are number one, eliminating taxes on tips, number two, eliminating taxes on Social Security benefits, and number three, eliminating taxes on overtime income. These are all different types of income taxes, which, if you remember, income taxes are just number one. And so what President Trump is proposing is that he wants to reduce the income tax on certain people by eliminating certain types of taxes. The one some people find the most interesting is a tax on Social Security income, because it's a tax that you're paying on money that you already pay taxes on. Because you're going to work right now and you get paid that salary, well, you're paying the Social Security tax. It's a part of your payroll taxes. So you're paying the Social Security tax, and then when you go and enter retirement, you finally get that money from the government, and then the government's going to tax you on the money that they're paying you. So it's really a Social Security income tax, because now as you generate that Social Security income, you have to pay that tax. And this is where President Trump is saying, well, how about we just remove that tax? Because if you're relying on Social Security, you have a fixed income, this will give you more spending power when you are in retirement if you don't have to pay taxes on the Social Security. Another interesting one has to do with overtime, because what President Trump is saying is if you're working overtime, you are one of the hardest working Americans out there. And if you're one of the hardest working Americans and you're working these extra hours, you should be able to keep more of the income for yourself. Now, again, all of this is just a proposal. We don't know what's going to happen just yet. I'll be keeping you posted here and in my free newsletter, Market Briefs. So let's see what's going on with that. Number two is President Trump has talked about extending certain tax cuts. In 2017, when Trump was president during his first term, he passed the Tax Cuts and Jobs Act, and that tax cut is set to expire in the end of 2025 unless something changes. And this is where Trump says he wants to extend that. The best way for me to explain what that means is just to show you. This is what our 2025 income tax brackets look like. And yes, I have rounded all of these numbers to keep it simple. And these are marginal tax brackets, which means on the first $11,900 of your income, you're gonna pay 10% of the money in taxes. For every dollar that you earn, more than $11,900 to $48,400, you're going to pay 12% of that in taxes. Between $48,400 and $103,000, you're going to pay 22% of that in taxes. For every dollar that you earn, between $103,000 and $197,000, you're going to pay 24% of the money in taxes. For every dollar that you earn, between $197,000 and $250,000, you're going to pay 32% of that in taxes. For every dollar that you earn between $250,000 and $626,000, it's 35%. And then for every dollar that you earn more than $626,000, you're going to pay 37% of that money in taxes. Again, this is for a single tax filer. And when I say marginal tax bracket, what that means now is if I make $100,000 a year as a single tax filer, the first $11,900 are going to be taxed at 10%. Then for every dollar between $11,900 and $48,400, I'm going to pay 12% of that money in taxes. And then for every dollar that I earn between $48,400 and $100,000 a year, I'm going to pay 22% of the money in taxes. So just because I make more than this doesn't mean that all of my income get taxed at 22%. It's marginal, which means for every dollar that I earn in this bracket, I pay that much money in taxes. For every dollar that I earn in this bracket, that's how much money I pay in taxes. So this is the 2025 tax rates that are a byproduct of the Tax Cuts and Jobs Act that was passed in 2017. So the question is, if these tax cuts don't get extended, what would happen to tax rates? I'll show you. This is what would happen. If you make over $11,900, your tax rates are going to go up. The marginal tax bracket rates would go up in almost all brackets except the lowest tax bracket, and then this tax bracket right here, where it would stay at 35%. So this would go from 12% to 15%, 22% to 25%, 24% to 28%, 32% to 33%, 35% would stay the same right here, and then this would go from 37% to 39.6%. So again, whether you're making $30,000 a year or $6 million a year, you would be impacted because for every dollar that you earn between $11,900 and $48,400, you'd be paying 15% as opposed to 12%. Now, the other thing that I want to let you know is this dollar amount changes every year with inflation, so you don't have to worry too much about this. We'll see what this is in 2026 as we get closer to 2026. But what we know is that this tax percentage is what would go up if the Tax Cuts and Jobs Act does not get extended. But this is where Trump says that he wants to extend the Tax Cuts and Jobs Act, that way these tax rates don't go back up. Now that we've covered how Trump wants to extend the Tax Cuts and Jobs Act, let's talk about how Trump wants to encourage businesses to make their products in America. This is kind of a two-pronged approach. I'm going to call it the punish and reward approach, which is if you make your products not in America, you're going to be punished. But if you make your products in America, you're going to be rewarded. What do I mean? If you make your products in a foreign country, you might be subject to a tariff tax. This tariff tax means that if you're a business manufacturing things in China, you might have to pay an additional tax now to produce that product, which means it's going to be more expensive for you to produce that product, which means that now you might have to either A, eat up that cost and shrink your profit margins, or B, pass that cost on to your consumers. Now, if a different business produces that same product in America, well, they would have to pay more cost because the labor cost in America is higher than China. And this is where what Trump is saying is he's going to reward you by producing the product in America through tax cuts, by producing the product in America. What that looks like to me, as a random guy on YouTube, is giving businesses who produce products in America a better chance to be able to compete against businesses who produce their products in a foreign country by offering them, number one, the ability to not pay that tariff tax, and then the ability to save money on taxes. That way you can compete a little bit easier on price, which would essentially, in theory, encourage people to buy more products in America. Will it work? Only time will tell, but let me show you the financial side of how this actually plays out. Let's assume that Mr. and Mrs. Stick Figure right here own this business right here. By the way, in my native language, Punjabi, a mustache is called a much, a braid is called a gut. You own this business and this business sells guacamole. We're gonna ignore importing guacamole costs and tariffs for the purposes of this. But you have this business that you're selling guacamole. Let's say your business does $1 million a year in revenue. And I forgot to mention this a little bit earlier, I'm going to assume that you are a C corporation. That's just a legal term for the type of entity that you are. This is what most big businesses are. They are these C corporations. So you make $1 million a year, and let's assume for the purposes of this example that you have $500,000 a year in expenses. These are your salary costs, your avocado costs, your marketing costs, and everything else. That means that your business has $500,000 of profits. Well, if you make $500,000 of profits, now your business has to pay a tax. And then you, if you were to pull some of this money out for yourself out of the business bank account into your own personal bank account to spend it on, say, a vacation, you have to pay taxes on it again. So the question is, well, what is this business tax? Well, prior to the Tax Cuts and Jobs Act, this was a 35% tax. Through the Tax Cuts and Jobs Act, this fell down to 21%. So right now, at the time of me recording this video, it's at 21%. Now, we know that Trump wants to extend the Tax Cuts and Jobs Act, but what he also wants to do is if you make your products in America, he wants to give you an additional tax break. Instead of paying 21%, now instead you would pay 15% in taxes as the business owner. So now assuming that I'm making all my products in America, I would pay this 15% tax on the $500,000 in the business, which is $75,000, which means my business would be left with $425,000 after taxes. Now, Mr. and Mrs. Owner, stick figure of this business, want to pull some money out. Let's say that they want to buy a nice house, they want to buy a car. Well, now, if they pull out, let's say $200,000 to put into their bank accounts, they have to pay taxes again because now they have an income. Now they have to pay their own income tax on this. This is why it's called a double taxation. The corporation has to pay tax, and then the individuals have to pay taxes when they receive that money. Now, I know that was a hefty tax lesson, but the main point that I want you to understand that has to do with Trump's tax proposals is that the current corporate tax rate is 21%. He wants to extend the Tax Cuts and Jobs Act, which would keep the corporate tax rate at 21%, so it does not go up to 35%. But he wants to make an amendment which says that if you own a business that makes your products in America, instead of 21%, you pay 15%, while the businesses that are producing products overseas still have to pay 21% as a reward to make your product in America, a tax incentive to make a product in America. And then if you make a product in a foreign country, you also have to pay a tariff on top of that. So now that you understand how Trump wants to eliminate certain taxes, extend certain tax breaks, and then encourage businesses to make in America, I want to talk about one more thing, which is the risk and the cost of this. Remember, Governments are not in the business of making money. They collect tax dollars from taxpayers through the form of taxes, and there's a lot of different types of taxes. If the government is collecting less money in taxes and they don't change their spending, well, now you can start to see a problem. If you make less money, but your costs stay way up here, you have to make up that cost somehow, and the governments have been doing that in the form of debt. And so if the government reduces tax income while not cutting their expenses, well, that's going to put us into deeper debt, which is going to cause more problems. On the flip side, the government can cut taxes in the hopes of trying to grow the economy, to raise the taxable income, to raise the taxable base, to keep expenses up here, which could help make up some of the gap. But you do need to cut expenses if you want your tax revenue to equal your tax expenses. It's kind of like a budget. You make $100 and spend $100. Unfortunately, the government has been making $100 and then spending $200, which you can see why that's a problem. But of course, there's consequences to everything. There's consequences to the government spending a lot of money. That means you have to pay more money in taxes. That means more of your tax dollars could be used just to pay off the interest on that debt, as opposed to providing any value to you or other taxpayers and citizens. It could also mean that inflation becomes a bigger problem, because if the government is going deeper and deeper into debt to spend a whole lot of money, well, that money printing that is done could create more inflation. So those are the cons of spending a lot of money. But there is benefits of the government spending money, which is they could create jobs. I mean, the government could pay somebody to raise their right hand and then raise their left hand. They created a job. It's not a productive job, but it gives somebody a salary. And that salary then allows this person, I know I'm giving a weird example, but allows this person to now go out and buy a car, buy a house, and spend money in the economy. Likewise, if the government starts cutting their expenses, there's the consequence to that. The consequence to that is, well, people could be losing their jobs. We've heard of government layoffs happening. Other consequences could mean that the government is spending less money on things which would impact the people that are receiving those things and the businesses that are selling the things to the government. And so what I want you to understand when it comes to taxes is it's complicated. And one thing that you'll want to think about as a person is, who do you think is better with tax dollars? Is it the government, or is it you or private people? Would it be you better at allocating where that money goes, or is it the government? Is it entrepreneurs, or is it the government? That's up to you to decide. I would love to hear what your thoughts are. You can let me know down in the comments. But this is what can dictate whether it's more taxes for a bigger government or smaller taxes for a smaller government, that way people keep more of those tax dollars for themselves. And with that, we'll see what actually gets passed. Again, I'll be keeping you posted here on my channel, and I'll also be keeping you posted on Market Briefs, which is my free financial newsletter for investors. You can join Market Briefs and you can sign up for my free workshop. I have both of those links for you down in the description below. President Trump is now considering getting rid of the income tax. Take a listen.
As I said in my speech last week, instead of taxing our citizens to enrich foreign nations, we should be tariffing and taxing foreign nations to enrich our citizens.
The Fair Tax Act of 2025 was a bill proposed which would effectively abolish the IRS.